Hi, this is Nate Williams from Practice Financial Group, and today we're talking about tax strategy. I'm going to share one of the most important tax strategies that you can learn that is extremely countercultural. In fact, if I were saying this live, a lot of you would boo me off stage and throw tomatoes, but you would do so at your own peril. The strategy is this: try to pay more in taxes. Let me explain what I mean by this. Try to drill this into your mind. You should want to pay more in taxes. Let me say that again. You should want to pay more in taxes. The more you invest and pay off debt, the wealthier you become. That's a fact. The more income you make, the more you can invest and pay off debt. But with more income comes more taxes. So here's the cold, hard facts about taxes. More income leads to more taxes, but it leads to the ability to build more wealth faster. Let's go further into this so you cannot misunderstand what I'm talking about. When it comes to your finances, you can pick one primary financial strategy: maximize wealth or minimize taxes. But you can only pick one to be your primary strategy. Which one will you pick? Let me explain how you build wealth. To build wealth, you need to grow the revenue in your practice or reduce the expenses. Doing so will grow your net income. Now, there isn't a doctor I know who wouldn't take the opportunity to grow the revenue or collections in his or her practice. Likewise, almost everybody would jump at the chance to reduce expenses, thereby growing their net income. But when you grow your net income, you're going to pay naturally a higher income tax. That's just the natural result of it. This is not my opinion or my deranged political ploy. More income leads to more income tax. But it also leads to opportunity to invest more or grow your assets or reduce your liabilities, thereby increasing your net worth. Does this make sense? Let me just be crystal clear on this point. Reducing taxes is not the primary financial goal. Get that out of your head. Our goal for you with regard to taxes is to do what we call manage taxes. Now, of course, we want to take every reasonable and legal tax deduction available to you. The minute you become a CPA is the minute you become obsessed with what tax deductions can people take. But that is not the primary goal. We never want to buy anything for the sole purpose of minimizing taxes. Now, if you buy something and it happens to lower your tax liability, great. But we're not going to go out and spend money for the purpose of minimizing taxes. If you're a Practice Financial Group client, another important part of managing your taxes is that we will proactively manage tax projections and corresponding tax payments for you. The government dictates not only how much you pay in taxes, but when you pay that. We will manage that for you without any effort on your part. Working with PFG, you won't be surprised by a big tax bill that you didn't expect and weren't prepared for. That's one of our promises to all of our clients. However, beware that you get what you most want. Doctors who obsess about paying as little in taxes as possible are vulnerable to poor financial decisions, such as buying equipment they don't need, accelerating depreciation via Section 179 when equipment is purchased on debt, forcing themselves later into the tax trap. Now, I'm going to go into this tax trap in a completely separate video. Another vulnerable financial decision or poor financial decision is investing in bad real estate deals and doctors getting excited about the losses that come. Yes, excited about losing money. Overspending in their practice, creating a culture of wasting money. We've seen this a lot of times, whereas the doctor feels very prideful that they're paying less in taxes, but they're wasting a lot of money and not reaching their financial goals anywhere close to how quickly they could. Also, beware of being vulnerable to falling for tax scams like the conservation easement credit. Also, doctors who obsess about paying too little in taxes can disregard tax laws, running all manner of personal expenses through their business in effort to lower practice or lower taxes. We just think in general this is a bad financial and life decision. So, in summary, your number one financial goal should be to build wealth, not minimize taxes. And again, to go over my diagram, growing revenue, good. Reducing expenses, also good. Doing that will increase your net income. When you increase your net income, yes, you will increase your taxes, but you'll also increase your opportunity to invest in assets and reduce liabilities, thus increasing your net worth and increasing your future tax liability as well. So, for those of you who don't believe me that you should want to pay more in taxes, let me share with you 4 of our wealthiest clients. Let me give you some numbers about them. First client, I'm just going to share with you these numbers about them. First client, age 44, had an operating income in 2023 of $1,368,871. This doctor paid $416,653 in taxes. That's a pretty hefty tax bill. But the doctor has a $10.3 million net worth. Doctor number 2, 46 years old, $1.99 million of operating income, $683,000 in taxes, $10.5 million net worth. Pretty good. Doctor number 3, age 52, $2.5 million operating income, $1 million tax liability. Wow, thank you, paying far more than his fair share, but has a $13.6 million net worth. Doctor number 3, $1.95 million in operating income, $634,000 in taxes, $11 million net worth. I hope you can see that the equation always works out. More income, more taxes, but a greater opportunity to grow your net worth. You get to pick. Do you want to minimize taxes, or do you want to maximize your net worth and your wealth and therefore your financial freedom? Those two things are going to work kind of together, but also in opposites. So how you answer that question is very important. I hope this is helpful.